What's up, everybody? Michael Silva here to do some technical analysis on the S&P 500. We're going to be looking at the weekly time frame, the daily time frame, and the 30-minute time frame. Going to map out support, resistance, kind of get an overall sense as to where this market might be heading next. Let's get into it. All right, welcome back. Hey, if it's your first time here, make sure to hit that subscribe button. I do these videos every single day, Monday through Friday. On Saturdays, I post the weekly scan, which is a series of stocks that I go over and tell you how I would go about trading them. In this recent video that I just did on Saturday, we had some really good stocks take off today. So congratulations to anybody that was able to catch some of those gains. The one that I posted on my community tab, ticker symbol WKHS, I played on my small account challenge and I got out of the position today for over 100% gain. Post a screenshot right over here, as you can see. Not too bad. I started that account off. I reset that account with $500, made some trades that went good. Then I had some trades that went bad. And today really set that thing off for me. All right, enough about me. Let's just get into the technical analysis because that's why you're here. So we are looking at the weekly time frame, and the reason why I post up the weekly time frame is really just to look over this trend line right here. As you can see, coming back to June 3rd, it's bounced from that point and has been acting as support up until the point where it crashed down. And that was in February when we had the stock market kind of crash through the roof there. Now, when it pulled all the way down here, we had this massive retest with this candle. And as you can see, fast forward to more recent weeks, it's been acting as resistance. Now, in technical analysis, once support is broken, it then becomes resistance. Now, what's important to know about when support's broken or when resistance broken and when it converts to either a support or a resistance is how many pivot points and data points does it actually have on that support. So when you look at this trend line, you have 1, 2, 3, and then when it finally crashed down, it retested and acted as a resistance. So 3 data points, and not to mention you have each one of these candles is a week. So you have 1 week, 2 week, 3 week, 4 week, 5 weeks, 6 weeks. So you have a lot of separate data points. So this trend is an important trend to keep an eye on. So that's why we're going over it. So what is taking place currently right now? Well, let's zoom into it. Great start to a Monday so far. Had a big gap up and a push a little bit higher. Now, some could argue once we get into the daily time frame that this could technically be a shooting star. However, I would like to see it as a red body. It does have a long upper wick, but you can't really see it too much. Now, Tuesday in Wall Street's known as Turnaround Tuesday, and this is a pretty significant area of resistance, as we already mentioned on this time frame. So it looks like it's trying to push itself through. On a good note for the bulls, it did get above this week over here, this inverted hammer right here that we were talking about. If we get a weekly close above that, we can easily see the market come to close that window at 3,330, which is right here. And if we get above that, we're definitely testing the market high, but we have to watch it day by day to see what actually happens. Big area of resistance this week is running into. Will we get the pop above it and a continuation to the upside, or will we get some sort of blow off top and continuation to the downside? Time will tell. We'll wait. But right now, everything is in bullish context. Let's hop to the daily time frame. All right, we are here at the daily time frame, and as I just mentioned, the chart is in bullish context, and I want to give you some more narrative as to why that is. Well, we see the 50-period moving average sloping up, the 200 is starting to pick up traction. We had the golden cross right here, which is basically indicating that, hey, the trend is shifting into something positive. Does that necessarily mean it's going to go to the moon? No. Does that mean it's going to take this huge crash to the downside? No. But it is something to note. I've said that before when it actually happened, the day before it actually happened, when I mentioned and made a video about that. And we've been seeing a continuation to the upside. As far as the support goes, we were talking about the 3,200 level, which is right here on the chart. Let me make it green. And as you can see, it acted as resistance here, it acted as support back here, and then it also acted as support multiple different days. It came down to retest that level. So 3,200 right now is that floor level position. And as the price action continues to move above the 50-period moving average, the 50-period moving average and the 200-period moving average will continue to slope upwards, which those levels are the godfather moving averages. They're levels that a lot of traders keep a close eye on, and they typically act as a strong level of support. So when you look at where it's at right now, The 50-period moving average is just about at 3150, which is a level that we've actually been talking about for quite some time in previous videos. And as you can see, when you look at this chart, you had resistance here, and that was why we talked about it, and then you had support around this area at that 3150. So when the 50-period moving average crosses that level, there's going to just be more bullish context, more bullish support on this chart. Now that doesn't mean things can't turn around, and they can't turn around fast. As we've seen in the history of the chart, we've had some pretty large dramatic down days, but keep in mind what the Federal Reserve came out and said and what they're guaranteeing to do to protect the markets. Let's go ahead and zoom in closer here just to get a good sense as to what's going on with this price action. Now, as I stated, this could technically, somebody can call this a shooting star. Look exactly where it came from. It's awesome. It bounced all the way up here and then hit perfectly on this trend line and then started pushing down towards the end of the day. It had a high of about 33.02, it seems like. Yep, 33.02, almost 33.03, and then moved down a little bit. Still, what's the context? Well, we had a gap up and it moved up higher and closed green on the day. That is bullish context. What is bearish right now on this chart? Well, really the only thing that's bearish is that we're coming into massive area of resistance. So it's hard to say, it's hard to state, that this is a really, something that you'd want to short into. Now, turnaround Tuesday is a very valid thing. I bet you if I were to pull up the actually MACD right now, let's do that. As you can see with the MACD, so let's look from this point to this point, you have a low high here to a higher high here, but on the MACD you have a high here and then a lower high here. So you technically have a negative divergence taking place on this chart as well. So I guess we have a big area of resistance, we have a negative divergence on the MACD, we kind of have a shooting star type looking candle. So there are some bearish things that we can take into consideration. Is this particularly the place where I'd want to just go long in the markets just because? No, not necessarily. I would actually prefer some type of pullback, because what we've been saying here is this is a buy the dip, sell the rip type of market. And as I see it, there's still a few bearish things to consider before just jumping in right now at this particular point in time. So the narrative of buy the dip, sell the rip still is there. I still believe it. As far as patterns go on this, I mean, if you want to call this a cup and handle, you can. I would consider this a decent cup and handle. It's kind of sloppy right here. You have the cup and then you have the handle right here. So if this does break this trend line, I know that there's a lot of traders, investors looking at this trend line. So if this breaks, we might see a pop up to the upside, and that might be enough to not only just close that gap window from the previous history of the chart, but blow past the market high. Why am I telling you this? Well, it's just to prepare you. It's to take notes so you could get a good sense of what's taking place in the markets. We got to look at both the bearish sides, the bullish sides. We need to look at everything to be able to prepare ourselves to make moves when we need to make moves. Let's go ahead and hop into the 30-minute time frame to see how today played out. All right, so we are here on the 30-minute time frame. Now, I typically have my previous areas of resistance and support placed up, and really the only one that I want to keep note of is this red one up here, the 33.30, and that's where that gap window closes that we talked about on the daily and the weekly time frame. As far as today goes, it really just jumped above both the short-term resistance levels that we talked about, and we said that on last video. On the previous trading day, which was this kind of U-shape right here, we called that a gap, a trap, and then a snap, because that is exactly what happened. We gapped up, we got trapped down here, and then all of a sudden we moved higher to the upside. That is what we were saying about buy the dip, sell the rip. What happened today when the market opened? Well, we opened up right over here on this candle, and as you can see, really we just traded pretty much sideways. So there's going to be a couple levels of support that we want to take into consideration, and I'll walk you through that and my reasons as to why those are the areas to keep an eye on. So the area of support that I want you to keep an eye on going into tomorrow is going to be twofold. We're going to have two levels. We're going to have first where the price of the stock gapped up to and pulled back to. So that's 32.84. Now on Friday, we mentioned that 32.80 was that level of resistance. Well, we gapped above it and the price clearly pulled down today and bounced from that level. Now, this is obviously a zone. You can move this up just a little bit to 32.85 if you want a more round number, or you can even pull it up a little bit higher at 32.88. Just for making it simple, I want it just at the bottom of this candle because it bounced from that point and didn't touch it again all day. The next area of support is going to be 32.70. And the reason why I'm calling it 32.70, it's technically a little bit higher, but that is where the window started, right? So we had the gap up from this point, which we called resistance, and then resistance up here, we gapped above it. So this window right here will act as an area of support. If the price can pull down through 32.84 tomorrow, we might see a bounce from 32.70. Or if the price pulls down to here, 32.84, we might get a bounce from that point. As far as resistance goes, we're going to keep an eye on this purple trend line. As you can see, look at, so it came up, got rejected, formed actually a pretty significant reversal type of candle, but then it only moved down a little bit back into this area of support basically, and then bounced from that point and continued to move higher. Look at this candle right here, another reversal type looking candle, but it wasn't strong enough. So the price continued to push itself higher to another small little reversal candle, and in the last hour of the day, then we got pushed down. This right here is more of an indecision candle. So as I stated on the daily and the weekly, we're running into a lot of resistance. We have a negative divergence on the MACD. There's some very bearish things, but there's more bullish things going on right now. Tomorrow's turnaround Tuesday. Will we see a move to the downside? This market has been quite a wild ride lately, so I can't wait to see what takes place. That's all I have for you on today's S&P 500 technical analysis video. See you later.